All right, hello and welcome to Camel Finance. I'm your boy Camel, and things are starting to improve. Have you noticed this? Have you noticed this? This melt up chart is starting to look more and more feasible. Now, again, I'm still very much take it one day at a time. It's not a prediction. And people love predictions, right? People love predictions because they bring certainty to an uncertain existence. And it's not very nice to be told that even the pros have no clue what's going to happen tomorrow, next week, next month, or next year. It would be much nicer if I could say, this is going to play out, here's my prediction, and then people could choose to put their trust in it or not. But unfortunately, we have to take this one day at a time. This is still a market. But what we can say for sure is that there have been times when this has looked genius, and there have been times when this has looked absolutely absurd. Right now, this certainly looks feasible. This seems to be feasible. We're above these highs for the SPY. We're not far away from this local high back here. If we hop into the NASDAQ is melting up. Can you see this? Okay, I don't see any other way to label this pattern right here. This is a melt up. This is exactly what I was expecting to happen. And again, this is not me trying to say I told you so. This is not me trying to say that's it, we're confirmed. Anything can happen, right? Including this. That could certainly happen, or we could just crash tomorrow or Monday, excuse me. And nobody knows, right? Nobody knows. So again, no predictions, only expectations. But so far, these expectations seem to be coming closer and closer to being met. So the long and short of it is one day at a time, but so far so good. Let's start at the top and work down. Here's the S&P 500. So, this has been a difficult position to hold. It's much easier to hold like a NASDAQ breakout where we break out and we just rocket higher. These are much easier to hold. This has been quite a wrench in one out of this cycle low. It looked like a failed cycle, then it looked like a breakout, then a fake out, and now we're back above, okay? So the big thing is to let your stop do the worrying, to not go getting in and out of your own positions, to not go snookering yourself or whatever expression you want to use, right? You just want to let the market give you what the market's going to give you. So we're long, we're strong, we continue to push. And although it didn't look like it a few days ago after we rolled over and came back underneath this downward sloping purple resistance line, we're now back above it, which tells me to be more open to seeing a higher up cycle low, maybe something like this. As ever, one day at a time, but we're long, we're strong, we continue to push. There's really not much more to say about the NASDAQ either. The NASDAQ, we're long, we're strong, we continue to push. Some level of move back to this yellow line at least is reasonable. And I would not be surprised to see this break down and then come down and touch this upward sloping red support at some point. But if we are indeed entering this final blow off top move, then it also wouldn't surprise me to just see some insane rally from here that traps people out. I mean, it's been really difficult to get in here. You had your opportunity on the breakout, right? You had your first one back here, your second one here. Then you could argue perhaps you had this little one here. I don't know if you would have taken that, or this one here. And since then, unless you were buying here, which nobody was, then it's been really, really difficult to get in, right? It's been really, really difficult to get in, and it wouldn't surprise me if we indeed continue to melt up and lock people out. Logic dictates that this rally is probably getting a bit long in the tooth and would need to correct, but of course, lots of people are going to continue to short this rally. Lots of people are going to continue to doubt this rally. Lots of people are going to be calling for a plunge, which we have to remain open to, but that is not my primary expectation. And we can, in my opinion, not even bother entertaining that as an idea until we lose this upward sloping red support line. The Dow Jones has been stopped out of break even. So if you've been following the position, we got long here. Then we were kind of hoping to see some kind of pullback followed by a blast off. We just haven't had it. I moved the stop to break even because the price action was looking weak. And as you can see, if I zoom in here, we got wicked. So this position is stopped out for break even. So that's fine. You want to keep the losses to break even or small whilst letting the profitable trades run. So we're back to neutral on the Dow Jones, like I said, still pushing the S&P and the NASDAQ. Volatility continues to behave as expected. So as you can see, a strong rejection off of here. This indeed speaks to further downside for the VIX, which of course translates to further upside in the equity markets. At some point there will be some spikes, but again, I'm not in this camp of people that thinks one of these giant spikes up and a stock market crash is coming just yet. I do think first we have to get down significantly lower, and then from there we will have that massive, massive crash. But first we got to convince everyone, right? We got to convince all of these bears on Twitter, all of the people that are calling for a crash. We've got to convince these guys to enter the market near the top. Only when they capitulate up in this sort of neighborhood can we start to really produce the type of conditions completely opposite to what we've had. Remember, all the way through this section of the rally, We've had doubters. We've had people posting the 2008 fractal plunges. We've had all sorts of bearishness, all sorts of hate, all sorts of salt, all sorts of spite and anger, and people saying it doesn't make any sense, and people talking about earnings and blah, 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 blah. But the facts are, we have been in an uptrend. We have been climbing the wall of worry. And we first need to convert all of these naysayers and bears to bulls up in this neighborhood. Once everyone is in the market cheering for some sort of super cycle, some sort of new all-time high mega pump, only then, when sentiment has shifted from majority bearish to majority bullish, is the setup right for the contrarians such as myself to say, okay, everyone is long, everyone is strong, everyone's happy. That makes Camel very nervous. That makes Camel concerned. And I don't ever want to be positioned with the crowd. The reason I was so comfortable being long through here, besides just the chart, was that everyone is bearish. But once we flip all those bears to bulls, then I will be a bull in a crowded room full of other bulls. And that's not something I want to be. So I become very bearish as we start to go higher. I also become very bearish as the VIX starts to get down to these low teens. Once we get in this neighborhood, expect me to start posting thumbnails on YouTube with 80 to 90% of the Dow is about to be wiped out, right? And people at the time, they're going to call me crazy. They're going to say, oh, there's no way, super cycle, blah, blah, blah. But this is just how I like to trade. I like to be on the opposite side to the majority because markets always move to harm the most amount of participants. Did you notice how here's Apple, right? We're still in, we're still pushing up, we're still bouncing off of this support. So again, not much more to say about that, apart from we've given it the space. This has turned out to be exactly what we wanted to see. We've recovered these trend lines. We continue to trend up. We can extend this out because we're likely going to be holding this position for a bit longer. And it's just a rinse and repeat cycle, right? We want to be long all the while we're above these two upward sloping support lines, but close below those on a daily basis. And that's our trigger to exit the trade. So far, we like what we see out of here. And I wish the story was similar for IPX, but it just isn't. Now, IPX is a UK listed UK asset manager. And given the state of the FTSE 100, which has had this big sort of bleed down here, then it's not really surprising to me. I didn't foresee this move coming, but it's not surprising to me given that this is what's going on in the UK, that the UK-based asset manager is not doing well. Now, again, as I was saying with the S&P 500, right, there's been plenty, oh my goodness, look at this. There's been plenty of times during this current trade, right, out of this cycle low, there's been plenty of reason to duck out of the trade. We had, first of all, a cycle that would not seemingly take out this high and confirm a new cycle. Then when it did, it looked great, but it sharply reversed back under here. That was another reason to exit this trade. But by not getting in the way of the trade, by letting the stop do the worrying, now we're able to hopefully capitalize on this move. Now it has hopefully been established. So applying this same logic to IPX, right? We're long, we're strong, we continue to push. Now, have we got breakout, retest, looking for that resumption higher? Possibly. But again, I don't want to just say, well, might as well cut this trade here. I want to let the stop do the worrying. This was the original thesis for the trade, right? The stop was down here. So we'll let the stop do the worrying. If we have to take a 1% loss or a 2% loss, that's absolutely fine, so long as it's never more than 2% in your total account, remember. And also remember, you can't win them all. But as the realist trader on YouTube, I will always show you every position, win, loss, draw. And if I ever make a mistake, I will own that mistake and call it out for you. So far, long and strong continue to push. Doesn't look good, does it? Not very far away from being stopped out. But again, this could easily be breakout, retest, and resumption off of here. So if that's going to play out, I don't want to get in here and stop this trade out manually, only to see the price reverse and go higher. So we'll see what the market can give. If we have to pay a stop, of course, that is absolutely fine. That's what stops are for. The dollar is, as you can see, broken out here, retested. So is it going to resume off? Is it going to do this? Is it going to pressure risk? Are we going to enter a stage where we could have a melt up, where we could have risk assets rallying with the dollar? You know, is that possible? Is it possible that we see the dollar move higher whilst the stocks and Bitcoin move higher? Is that something that we have to entertain? It's not really something I was considering until just now, but maybe that's something we could see. Now, it's important to point out the dollar isn't really rallying from strength here. The dollar, or at least the dollar index, is rallying due to JPY weakness. So this is not exactly as bullish for the dollar as it looks. This more speaks to Japanese yen weakness, but we'll see how this goes. We'll continue to track this. To be completely honest, whether we get the rollover that I expected or not in green here, whether we get this rollover soon and then continue down or not, I don't really care. All I care about is, do the risk assets continue to rally? So we have done really well at using the Dixie to let us know when to position in and out of risk assets. Maybe that will continue to work, or maybe this is about to buck the trend and we're going to get, like I said, the Dixie running higher with the risk assets. So long as we maintain on the right side of the risk, I'm not really too concerned about the Dixie, but this is certainly very interesting. It's an interesting development. We'll see what can happen from here. Perhaps it only takes a quick debt ceiling resolution to see this reverse sharply. But again, as ever, no predictions, only expectations, strong opinions, weakly held, and we'll take this thing one day at a time. Yields continuing to rally, although this could be coming to the end here, couldn't it? We could be about to see a move into resistance, followed by a rollover and rejection. So is that what's coming? Quite possibly. It's the same for the 2-year yield as well, isn't it? Let me clean this chart up for you. So we'll see what can happen from here. We'll have to keep an eye on this. Yields are apparently pricing in another 25 basis point hike. So this is really interesting, isn't it? We keep thinking we're getting close to the end of this hiking cycle, and then there keeps being more and more 25 basis point hikes. But we do know that inflation is coming down, and inflation is coming down rapidly. So the Fed is here. The Fed still is treating us in terms of their rate hiking cycle like we're at 4.9% CPI, when really, according to Trueflation, we are down on a 2% CPI handle. So we're getting dangerously close now to that 2% target that the Fed has had. Whilst they are lagging because they use lagging data, the light is certainly at the end of the tunnel. And to be honest, the rate hikes isn't the problem. The problem is then the pivot from the pause in rate hikes to the cutting rate hikes is what historically has caused the crash in markets. Now, retail believes cutting rates is bullish for markets. Of course, it's not. It's a hidden little secret of the pros here that the cutting cycle is usually what tops markets. Thanks to the internet, this is becoming far more well known amongst retailers. But there is light at the end of the tunnel. And if we can get a low CPI print at the next readout, then it's going to give the Fed more credibility in terms of moving to pausing rate hikes, and that pause has historically always set up the final blow off top portion of the rally. So things continue to look good. Whether we get a 25 basis point hike at the next FOMC or not is to be determined, but that seems to be what the yields are now pricing in. So we'll see how that goes. TLT, as you can see, moving down towards support. So do you want a long TLT off support with a stop a little bit below? Is that something you're interested in? And lastly, Bitcoin. So we are still hanging around, haven't we? We have arguably got a double bottom for Bitcoin, but it just can't seem to catch a pump right now. It would be incredibly bullish if we could do something like this and break out, but I have to admit this does look quite heavy. Ethereum, on the other hand, starting to look and show relatively stronger, starting to show relative strength here. So not too far away from seeing Ethereum become a leader and break out. That's something we have to keep an eye on. Noticing XRP is looking to break out here. So I talked about being super careful about running the liquidity above here. So a move above here only to sharply reverse and come back down. Is that what's coming? Or if we can get above these highs, are we going to take a long here and see what's coming out of here? I'm noticing there's a lot of hype about XRP on Twitter. So we'll see how this goes. Certainly want to see daily closes above this high to confirm this breakout. So I'm keeping a close eye on this. If we start to get above these highs on a daily closing basis, then I think we can entertain longs. But for now, I just want to be super careful that we don't see something like this and a sharp reversal. So my question is to you, why XRP now? Why XRP now? I don't see why. So we'll see how it goes. Here's Coinbase. So still trading sideways, still showing relative strength compared to its low and Bitcoin. So we'll see how this goes. For now, I don't want to get in the way of it as per usual. The same is true of MicroStrategy, isn't it? So relative strength compared to Bitcoin, but still kind of looking heavy, getting dangerously close to getting a touch of this downward sloping blue resistance line. So we'll see what can happen from there. Riot, again, showing relative strength compared to Bitcoin, but still kind of looking heavy. And Marathon, again, looking like it wants to make equal lows. So we'll see how it goes from here. Weekends used to come with a lot of pumps. We used to get a big pump on a Sunday most of the time. So maybe that's soon to return. Maybe that's wishful thinking. But as always, we'll move into next week prepared, flexible, and unbiased. So that's it from me. I hope you enjoy your weekend. I hope you found value here today. And I will be back on Monday with another video. So until then, take care from me. All the best. Cheers. Bye.